Ladies and gentlemen, good day and welcome to the Mech Project Limited earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashil Gandhi from Nirmal Bang Equities. Thank you and over to you.
Thank you, Diksha. Nirmal Bang Equities welcomes you to Q4 FY22 results conference call for Mech Projects Limited. The management today here is represented by Mr. S. Konandaramaiah, Director, Business Development, and Mr. J. Satish, Chief Financial Officer. I now hand over the call to management for their opening remarks, post which we can take questions from the participants. Over to you, sir.
Yeah, thank you. This is Satish here. Good afternoon all, and thank you for joining the earnings conference call for the quarter and 12 months ended 31st March 2022. And I have with me Mr. S.K. Ramaiah, Director Business Development. For Mech, the quarter and year ended with a very positive note. We have seen various developments across execution, collection, and also in business development. Now Mech has got into a larger league, having demonstrated our execution capabilities in all the segments. For Mech, coming years will be a consolidation and growth phase. Last 10 years efforts for Mech in building credentials and competency started yielding results in all our business segments. To update you with this quarter's developments before we open up the floor for your question and answer session. The reported total income for quarter 4 FY22 is rupees 905 crores and the EBITDA is rupees 98 crores and the reported PAT is 48 crores. Whereas quarter 4 of last financial year, the total income was rupees 760 crores and the reported EBITDA was rupees 79 crores and the PAT was rupees 36 crores. The revenue mix for quarter 4 is as follows. Erection business contributed around 152 crores. Civil business including railways and water business contributed around 516 crores. Operation and maintenance around 217 crores and electrical business close to 17 crores and other income close to 3 crores. In the same quarter in the previous year, the mechanical business contributed 166 crores, civil around 329 crores, O&M 223 crores, electrical 36 crores and other income close to 6 crores. Similarly, on year-to-date basis, the reported total income for 12 months FY22 is rupees 2,728 crores. The EBITDA is rupees 303 crores and reported PAT is rupees 139 crores. Whereas in the similar period for the last financial year, the total income was rupees 1,900 crores, marking a 44% rise in the revenue. The reported EBITDA was rupees 58 crores and the PAT was negative by rupees 46 crores during the last year. And the revenue mix for 12 months is as follows. Erection business has contributed 521 crores. Civil including railway and water has contributed close to 290 crores. Operation and maintenance contributed close to 805 crores and electrical business 93 crores. And other income includes 18 crores. And the same period during the last year, the mechanical business contributed 446 crores, civil 687 crores, O&M 661 crores, electrical 86 crores, and other income was around 20 crores. The quarterly and yearly performance remained all-time high for Mech due to its robust order book, strong execution capabilities across the verticals. This is expected to improve more on account of stronger engineering skills, construction management, and strengthening second level leadership in addition to robust order book. Margins are expected to improve in midterm to our reported peak level. We have seen additional cost on account of COVID protocol, royalty cost towards sharing the JV credentials in some of the new initiatives, and also due to price increase in some of our raw material consumed. The depreciation cost for the 12 months remained flat due to controlled capex spending. During 12 months, finance cost remained flat as compared to previous year, despite huge growth in business and execution. Going forward, the finance cost as a percentage and also as an absolute number is expected to come down further. The overall working capital cycle seen improving for the period significantly. The average monthly collection now ranging from rupees 250 crores to 300 crores per month, and which is expected to improve further shortly. The net current days, excluding cash and cash equivalent, has come down to 145 days during the year from 194 days during FY21 and 180 days during FY20. So we have seen significant improvement in our working capital cycle due to business mix. This has resulted generating surplus operating cash flow of 170 crores, 177 crores and free cash flow of rupees 135 crores during the year. This is a good achievement in Power Mech in recent past because of the working capital cycle improvement. The gross debt remained flat despite increase in the business and growth in the order book, and the net debt has significantly come down to 319 crores as compared to 379 crores during last financial year. The order book for the company stands at 8,855 crores as on 31st March 2022, and this is excluding the MDO order, and if we include the MDO contract, the order book stands at 18,149 crores. Seeing the present market opportunity size, the company has set a fresh target of winning 6,000 crores for this year. We are very confident of converting close to 3,600 crores plus from order booking to revenue during this financial year. Now I request Mr. Ramaya SK to add few more developments. Thank you very much.
Yeah, thank you, Satish, and thanks to Nirmal Bang for this big call. An update on what is happening on the business side and the order growth and the new opportunities. I think, as he rightly said, there has been a 21% increase in the total order backlog from 7,333 crores to 8,855 crores. That is a very positive sign. It is strongly driven by the new investments as part of the national infrastructure pipeline. We all have seen that is bearing fruits now. The COVID behind us, hope so. Things are normalized, and that is how the opportunities are coming up in a big way. And we have done extremely well in the civil and infrastructure side and the EPC projects, new engineering projects. In fact, the backlog in this segment of 2,584 crores has gone up to 5,842 crores, a positive of 463% in 21-22. And we have done exceedingly well with many new initiatives, and that order backlog has gone up from 1168 to 1244 crores, an increase of 17%. Of course, in the ETC segment, electrical segment, we are not seeing much of growth as on today because of the opportunities, and of course in the electrical, it is more due to the lot of competition and pricing issues, and we are waiting and watching, and we want to complete the ongoing jobs. But for total order booking compared to last year was 4,638 crores, and this year it was 4,231 crores. And if you look at the trend in the business, we have come out of the stagnation segment, what we had in between 18 to 20, and now we have crossed the 4,000 crores capability in achieving the order booking. And as Satish rightly said, we are gearing up to achieve around 6,000 crores with a lot of opportunities. And that is a positive sign. And in fact, that will help us to build up a fairly good order backlog, a good background of the margins availability, and a wider customer base. In fact, in the first quarter so far, two major projects we have taken about 297 crores. One with PHTC coal handling plant is an engineering and construction job. Godda boiler job. It was a job which could not be done by another agency, and they have given it a good account for ourselves based on our expertise in this other team. And both these jobs come to around 300 crores. Now coming to the domestic segment continues to play a major role, and obviously looking at the opportunities as per NIP, the Gati Shakti Yojanas, which are huge investments are coming up in all parts of the business. We find a positive thing on the domestic side. The order backlog has gone up from 6,357 crores to 6,212 crores, positive of 29%. And we continue to see wait and watch international segment. It has come down the backlog from 176 crores. The present backlog is 634 crores. It has come down by 35%. But in the power sector, what we had a dominant position with O&M and distillation business in coal segment, and all the associate jobs in civil O&M and installation. There is a downward trend there, 3,940 crores to 3,678 crores, minus 6.6%. But in non-power, obviously the growth has picked up. What was 46% of the total business segment in the order backlog, from 3,393 crores, it has gone up to 5,177 crores, almost 52% jump. So that is a very positive sign, and we continue to look at that opportunities, what is available. And coming to the O&M story, it has been a very good year, extremely good year, with major orders backed at Singareni, 2 into 600 megawatt, 343 crores, to Korean, 2 into 600 megawatt, 391 crores, ILFS in Tamil Nadu, 51 crores. And we have made a penetration into the JSPL, Angul, with a O&M job of 56 crores in the 100 metal handling job. And another positive aspect is that the opportunities are looking up for the shutdowns, maintenance, capital overall in the export sector. About 80 crores of orders have been taken in the Middle East mostly, and that is where perhaps we can look at new future opportunities. And non-power sector is also an initiative O&M. Earlier we had taken Tata Angul, and now JSPL Angul we have taken up. And another positive aspect of O&M is the more interest of the PSUs in getting the O&M contracting done through a specialized agency. That we have seen the success in Singareni, and then KPCL and NTPC, all these jobs substantially account for our O&M backlog also. The major orders which we bagged in the current year are Ove Adani coal handling EPC of 80 crores in Tavira. Then NTPC Kelmo civil and structural job 112 crores. MDC civil works 57 crores. Adani Khammam Koda road project of 645 crores. And Ungodi civil and structural work of 345 crores. Then we have taken another North Chennai FGT job in civil and structural 120 crores. And a railway job of RBNL in Baroda for a engineered fabricated building structures, 127 crores. Then I told you about the Singareni O&M and the Tuticorin O&M, 343 and 391 crores. And the major breakthrough had been the huge investments coming in the drinking water project. As you know, 3 years we had made a beginning in the drinking water, Etwa, Bulandshahr, and Meerut, and now it has fructified into new opportunities and getting the orders in Prayagraj and Fatehpur. That is around 1854 villages out of costing about 1854 crores. This is how the orders have been taken in various segments. And major jobs are progressing pretty well. Udangudi job 345 crores, NMDC. And then the material handling EPC jobs of around 500 crores, which we have taken for time, where it gives a footprint on the engineering capabilities to establish the company. We have done at Kurmitar about 20% of the work out of 200 crores. And the jobs have been taken at Talavera and also Kurmitar at PHV job in Kurja. Then Buxar job is shaping well, 176 crores, 13% we have completed. Then Dolvi is under completion. Mote is under completion, 90% of the work has been completed of $76 million. Aitre and Yadadri progress are pretty well. 855 crores, 65% completed. Yadadri 813 crores, 30% completed. Ramayana Canal work, 373 crores, 85% completed. And Sadalpur, we are segment-wise are commissioning the railway electrification job, or 70% we have completed out of 350. Then water projects, we have just started in the last year, about 120 crores we achieved. That is a good beginning. These are all the major ongoing projects what we have done. And as far as development MDO of 43%, which was taken last year, the development progress is in full swing with acquisition of the land for the 5 million ton capacity mining operation from the central coal fields. And then where the consortium PMPL and AMR consortium and 7426 has established a purpose vehicle ABP Private Limited. And this is on track. The next process is to complete the various formalities involved in forest clearance, environmental clearance, and then going for the ordering of equipment and infrastructure development work. That is around 280 crores. In fact, one positive thing which has happened on the growth on the revenue side is due to the augmentation of the manpower which has happened for COVID condition. What we had about 28,000 manpower as on April 21 has gone up by almost 15% to 38,000. And with the increase in the manpower deployment for the O&M increase of business and also the construction business and installation civil various areas. That is how the positivity in terms of the manpower deployment is happening. As far as the opportunities are concerned at present, we are pursuing about 18,000 crores of opportunities in areas of the power sector, non-power sector, electrical, O&M, then water business, and non-power sector, etc. One of the things perhaps I would like to bring about is the implementation which we are doing on the drinking water project. Bulandshahr, Etra, about 898 villages. We have completed the DPR, detailed project report for 400 villages, and this is valued at 660 crores. The point is that the order value is given on a specified item rate, but when the actual work DPR is done, the value can go up. Therefore, there is an increase of 50% in the value of this village-wise working. And then 660 crores, we have done about 120 crores last year. And balance 498 crores village survey and DPR preparation is under progress. And we are working with a Hyderabad partner, BRCCPL, and 18 months contract. We have got price variation clause for the pipeline. And the percentage work involved in this is 50% almost cost of the pipeline work, 35% the civil work, 15% is the electromechanical jobs. And the total villages, this, as I told, 898, and the new order what we have taken, Prayagraj, Fatehpur is about 1854, and together today the company is sitting on a backlog of 2,700 crores of orders and 2,752 number of villages. And the DPRs are updated and the order values are updated. The implementation will come into force, and that is how we will get more opportunities. And another area of development is looking at the FGD opportunity. In fact, out of 1,69,000 megawatts of the installed base earmarked by CF for the FGD conversion, ordering has been done quite not very fast track has taken place. only 40,000 megawatts have been ordered by the developers, mostly in the public sector. Private sector has to take shape. And there are 448 plants, 149 plants in the central sector, 166 plants in the state sector, and private and IPs about 133 plants. And we are looking at some of the key opportunities which can be available in the private sector. And we are discussing with them and tying up also for the technology partner and bring a substantial business. And the main business thrust areas will be we continue to focus on the national infrastructure pipeline, which is also transforming it as part of the Gati Shakti integrated project management model to fast track the project, which has got an investment of 111 lakh, and that is where the substantial of our order booking also comes with investments coming. And with the new investments coming in minerals, coal and steel plants, with our experience we gained in the steel plant construction, in JSPL and JSW, perhaps we can continue to foray into the new opportunities coming up with ArcelorMittal and other investments. And also minerals and metals, a lot of investment coming in the mineral processing and material handling. Last year we have seen the success in taking 2 jobs from Adani Group, and more opportunities are expected. We are also bidding for many projects in that segment. The diversification to EPC has been a good beginning, where the company can acquire the engineering capabilities, and that is where we can increase our value additions in the turnover and the margins also. So I think with this, I would like to open the discussions and any questions. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants who wish to ask a question may press star and 1. We'll wait for a moment while the question queue assembles. We'll take the first question from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, good afternoon, sir. So can you please come back on the order receipts expected this year and the execution on the same? I think you mentioned, but I misheard that, I guess. So can you please repeat?
Can you repeat again?
Yeah. I wanted to know the order receipts that we are expecting this year and the execution on the same.
Yeah. I think the execution is on track, as we have seen, with the 2,720 crores with the initial order backlog of 7,333, and the addition of 4,251 crores. We have achieved a reasonable growth in the execution.
Yeah.
Now the balance order backlog as on today is 8,855 crores, and the new opportunities as I said, 2 orders we have booked so far. THDC coal handling plant along with Tyson Group 92 crores. And Godda erection for the Adani, 105 crores. This is 300 crores is there. And as I mentioned, in this year our target is to achieve 6,000 crores, taking into account increased opportunities available in various segments. Mm-hmm. And based on what we achieved last year, we feel it is confident we can achieve around 3,000 crores in the first quarter, first half, and another 3,000 crores in the second quarter. And the opportunities are in the work available in the power sector, then for 5,000 crores, then electrical business about 450 crores, and then O&M targeting about 1,400 crores. And water business around 1,000 plus crores, and the miscellaneous station jobs, and then non-power jobs, etc., around another 6,000 crores. And many opportunities tracking on the FGD, railways, and material handling and international O&M also. Therefore, these things happening, perhaps the next 2-3 months, lot of order flow is expected. And our expectation that by the end of the year, if we can achieve this, the backlog will go up to 11,000 crores. With that, the growth will be on a growth trajectory will be there in the coming 2-3 years.
Yeah, okay, sir. And one more question. You mentioned that margins are expected to increase going forward. So what could be the possible reasons behind this, and to what extent shall we expect the margins to increase?
Yeah. See the margins, we were operating in 12 to 13%, okay, and recent past, for various reasons, it has come down. And the major cost is the royalty which we pay to our JV partners for setting the credentials. That we have built the credentials in-house now, we can quote ourselves, so that is going to be a significant amount, okay. That will help us to improve the margins, number one. Number two, some impact on the material cost because of the price increase, which is expected to normalize, and the new fresh orders we have inbuilt, okay. So we'll see that second half it will start improving. So in midterm, we're expecting to come back to our normal peak reported margins.
Okay, sir. So can we expect it to be around 13% going forward by mid FY23?
Yeah, gradually it's expected to go up, sir. Yes.
Okay, sure. Thank you. That was my question. Thanks a lot.
Thank you. A reminder to the participants, anyone who wishes to ask a question, press star and 1 at this time.
Yeah.
We take the next question from the line of Pratiksha Daftari from Aequitas Investment Consultants. Please go ahead.
Good afternoon, sir. Just one question. Of our total order book, how many contracts would be having fixed price remuneration, and how many would have price escalation clause?
Yeah, I think we can take, because all these water projects have got escalation, road projects have got escalation, and some of the other jobs also we are taking an escalation. Maybe 60 to 65% will be with escalation clause, or the balance will be at the current prices.
Okay, and these escalation clauses are linked to WPI, right?
Yeah, it is linked with variety of factors, labor index, minimum labor wages, then commodity prices, then steel index also. Sometimes the steel price index also is there. We are looking at all these things and accordingly factoring in our new bids also, looking at the present condition.
Okay. And on our receivables, how much of our receivables will be from BHEL, days in terms of days, and how much would be the other segments?
Ish?
Yeah. In terms of receivable days, BHEL is around, it's still ranging, it's around 80 to 90 days, but overall it has come down. Okay. So BHEL used to be 90 days plus, but now it is there is an improvement of 10 days coming down. In terms of absolute numbers, it will be close to 130, 140 crores.
Okay. BHEL 130 to 140 crores, right? Yes. Hello?
Yes.
Okay. All right. Thank you.
Thank you. We take the next question from the line of Abhishek Bajaj from HDFC Mutual Fund. Please go ahead.
Yeah, thank you, and congratulations on good set of numbers, sir. Sir, regarding this, this order expectation of 6,000 crores for this year, does this include FGD order expectation also? And could you give some understanding that, if you're bidding for private...
Yeah, see, we are IPPs we are discussing, and based on the tie-ups we are going to make the partners, technology partners. And at this stage, what I can only say is that positive signals are there. And then as in the private side, apart from the participation, we have to look at the discussions and negotiations we have to enter into them, the methodology of execution also. And those methodologies will be cleared in the next 1 or 2 months. Then we'll have more clarity, but there can be substantial scope for the FGD orders in this year.
Okay, so this expectation of 6,000 crores would include FGD, or if FGD comes, that will be a plus for us?
No, it will include FGD also.
Sir, yeah, see 6,000, there are the various developments going on, sir. So to some extent, we have taken some of the contracts. Apart from that, if few more orders materialize, probably that will be on top of the 6,000. So we have kept 2 targets. So probably in few days will come with revised number. So this 6,000 we have taken considering O&M, electrical, water, and mechanical, domestic and international altogether. FGD pie, a smaller component also we have taken. But apart from that, there are some other discussions going on. If that fructifies, probably it will add on top of 6,000.
Okay, understood. And so this O&M, would the operating margins be much higher than the other EPC business? If you could give us some sense, how the O&M margins are. And given the increasing mix of O&M, should you assume that also will help you in operating margins in the next 1-2 years?
Yeah, it's, you've taken a right point, sir. See, normally this now the profit margins are ranging 17 to 18%. Okay, in the O&M pie. Apart from that, now what is missing is the international pie, where we wanted to grow in the O&M space too. But last 2 years been a bit slow because of COVID and all. Now since 4 to 5 months, we have been extensively traveling in international market. Now that will help us to push the O&M pie. Now one development is Dangote, the Nigeria, where we have been doing the mechanical work. Now that contract is getting over, and the customer has shown interest to give the O&M contract. That single contract itself will be close to 250 to 300 crores. So this O&M size may go up with the development of the international also. Apart from that, some of the developments in the non-power too. They're working in the petrochemical, steel and electrical side. And of course, in India, the public sector also, like Singaranike, Karnataka government, in the public sector, they've started initiating discussions. So we got 2 contracts that may also add to a larger extent. So overall, it will help us to push the margins. You're right, sir.
Right. And O&M is, let's say, sir, about 25-30% of revenue. So any target there, that where would we end up in next 2 years?
See, next 2.5 years, we wanted to, actually, honestly speaking, we wanted to double. So we are working in all the front, okay, backward integration, international, domestic and all. So at least next 2 years, this year we concluded close to around 800 crores. Maybe next year we may touch close to 1,000 crores. Maybe 24, 25, where this number should be double. That is the plan.
Yeah. Satish, one more thing in this is that all these O&M contracts are also renewed. See, as we add more new opportunities in the basket, what happens is the old contracts will become part of the renewal with escalation also. At least 1/3 of the contract can come renewal every year. And then the adding up the domestic balance in the non-power and also the government sector and the private, other sectors. And then the international business of O&M, because in Middle East there is an opportunity of 120 gigawatts installed base of O&M, and where we have many projects now, and the projects are under completion, and that should help us to get the market approach. That means we'll be able to hit the customers and get that we have done the selection question to O&M also. That is how last year we have taken about 80 crores of mainly shutdown jobs, but long-term jobs we are trying, as rightly said. At Nigeria, where we have done a $76 million job, we complete in the next couple of months. That is due for O&M project, and we are discussing it. And that type of project will be a huge opportunity, and that will add up to the domestic O&M, where we are one of the leaders, the leading service provider.
And moving from a non-comprehensive to full-fledged comprehensive, including the desk operation, now we have built that expertise. Singareni College is the live example now. That credentials will help us to reach to the existing customers and increase the scope. To some extent, that will also help to improve the existing business from the existing orders.
Yeah. One more thing, the water business, what has come in the drinking water, at the end of the project, there is a 10-year O&M contract is there. Therefore, all these water projects, drinking water projects, once we complete it, those projects will be eligible for O&M as part of the contract to be extended for 10 years. So that will also add to the profile of the O&M from what we are doing in power, non-power. The infrastructure, drinking water can also become a significant O&M contributor after say 1 or 2 years for business.
Understood, sir. And sir, any update on this contract with Coal India? Are we on timelines, and when do you see now it's starting?
Yeah,
the Satish, can you add up more?
Yeah, sure. So this Coal India, the MDO, this Kotre Basson KBP mining project, as per the original timeline, we were expected to have the FC stage 1 forest clearance by November, but however, the way it's moving, we are expecting to close by August itself. If that follows, probably the environmental will follow by December. So the ground activities should start thereafter 4 or 5 months. So we'll start issuing the orders, okay, and start working on the equipment and the infrastructure part. So this is as per the timeline. We are ahead of 3 months now. It's going well, sir.
Understood. And so the last question, capex for this year, how much are we expecting?
Sir, we have kept a target of 55 crores, sir, for this year. 55 crores enough, yeah.
This doesn't include any contribution for Coal India, or does it?
No, sir. This year we will not spend anything except maybe like all the clearances, plans and all. Okay, hardly maybe max of 7 or 8 crores. So we are talking overall of 55 crores during this year.
Okay, understood. So thank you and all the best, sir.
Thank you, sir. Thank you.
Thank you. We take the next question from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So I just wanted to understand, firstly, on this revenue, I think 3,600 crores we are targeting. So any sort of revenue we are building for MDO as well in this year, or it will start only from FY24?
Sir, FY24 will start billing the revenue. So FY23 is purely the existing cash contract. MDO will start adding from 24, sir.
24. So basically 8,900 crores excluding MDO. So we have taken about 40% conversion, right?
Yeah, and we have kept a target of 6,000 crores this year. So we have taken a softer conversion. So substantial amount is expected to come from the existing order book itself.
Correct. And next year, as we close in at 11,000 crores, and even if we assume a similar 40%, 4,400 crores, and then a 400 crores of annual revenue from MDO, a 4,800 crores FY24.
Yeah, see the existing order book plus 40% plus, the MDO will add close to 120 to 150 crores. So thereafter it will go gradually to 600 crores.
Gradually to 600 or 400? I think the MDO is giving annual.
It is going up now because being the price escalation and all, the weightage of diesel being given high 55%. So that 886 rupees per ton which we quoted, now it stands at 1,350 to 1,400 rupees. So the prices have substantially gone up. So that 400 may go up to 600 crores.
Okay, 400 crores may go up to 6. So ideally that means a 5,000 crores annual run rate maybe 2 years down the line is quite achievable for us, right? Given the current scenario. Maybe it will start, MDO will start at about maybe 150, 200, but gradually it will pick up, right, for us?
Yes, you're right.
Understood. Fair enough. That's quite a fair understanding. And on the margin front, now we are talking about 12-13%. FY23, is that what we are looking at?
Sir, see the margin front. See, now we have got a mix of new and old orders. Okay, old orders wherever we are giving royalty, that will continue. So first half maybe in line with what we are reporting now. So thereafter, we are seeing some sort of improvement gradually. So in midterm, we are expecting the margins to come back to our peak reported margins.
Which is 12 to 13%.
Yes, sir.
And by midterm, we are saying what, 6 months to 1 year?
No, slightly longer, sir. We will see the post 6 months based upon the ramping up the water and all the new projects. Because now we are working like in a situation where like the prices are all like have abnormally gone up. Okay, so we have factored that cost and all. But there is also a view that the prices may come down. Okay, so we'll take a view post second half, sir. So probably if this continues, this year will be in the range of the reported. Okay, maybe quarter 3, quarter 4, we may see some improvement. Okay, but surely 24, 25, there will be significant improvement.
I got it. Yeah, all the very best. Yeah. That's
Thank you,
from
sir.
my side. Thank you so much.
Thank you. We take the next question from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So I wanted to understand regarding the royalty. So whom are we paying this royalty to?
See, we have borrowed the technical qualification from some of the industry companies. So we are paying to as a royalty. Normally it ranges 2.5 to 4%. That is a straight impact on EBITDA margin. Okay, which we share to the other companies for sharing the JVs.
Okay. And now that we have developed these, what we can say, technical know-how in-house, so they won't be having any problem and nothing on the legal front, right?
No, madam. Now we are directly eligible. So we have built in-house credentials. So now we can quote directly. So we did not borrow the credentials. So this we have been working on since 7 years. Okay, there are some projects we started with 250 to 300 crores. Now there are some projects even in water, railway, we can go even up to 800 to 1,000 crores, a single bid. So that is the credentials we have bid in now.
Okay. And could you explain more on the order execution cycle of top 4 to 5 projects? How does it go?
I think in the drinking water projects, once the DPR is completed, DPR usually 16 months, because that is where the major intake is there. I think the cycle time is about 18 months. And that is for the drinking water projects about 2,700 crore. And that also can go up based on the actual number of the work content involved in that, because there are item rates. Ultimately, if items increases, the work content also will go up. Dangote major job in $76 million, I said 90% is almost completed. And the Maitri 855 crores, 65% is completed. Yadadri 813, 35% work is completed. And then Sadalpur electrification job 350 crores, 70% is completed. I think this is what. And then the drinking water we have done about 120 crores in the last so far. And these are all the major jobs.
Okay. Thanks a lot. That's it from my side. And all the best.
Thank you. Anyone who wishes to ask a question may press star and 1 at this time. We take the next question from the line of Mohit Kumar from DAM Capital. Please go ahead.
Hi, good afternoon, sir, and thanks for the opportunity. So my first question is on the total capital expenditure required for the CCL MDO, and what is the kind of margin, EBITDA margin is possible in this business? And the related question is that what is the opportunity in MDO you are targeting in medium term? Is this the only project you want to do, or are you willing to take more projects? And if you can throw the opportunity which is available for FY23.
Yeah. See, government has got a policy of liberalization in the minerals, metals, and then coal. Of course, the initial lot of opportunities from coal in about 50,000 crores. That was on the execution side. We had bid a few things, but MDO with more mines opening up in coaling side and non-coal side, and aluminum, and then iron ore and all. On a relative basis, we target it, and And there also we have to look for some partnership on these aspects. Therefore, it is on a selective basis to go forward.
Yeah. Just to adding to Mr. Ramaya, we have taken a mid-sized project, okay, where the investment is low. By next 2.5 years, we need to develop the infrastructure full place. So once it's developed, then we'll start generating revenue of 152. We'll scale up to 650 crores plus the escalation. So the strategy is once this mine gets operationalized, thereafter we'll take a view. Okay, as of now, we are not very serious to add any more projects. We want to be very selective. And the capex is this needs close to 364 crores. And we will go a model of equity and debt. So we may need to put 95 crores of equity, and it's a combination of we put pumping around 74% and 26% of JV partners, and the rest will go for a project-specific term loan. Okay, that is the plan. And we quoted this project assuming IRR of almost 22% plus. Okay, and taking the new revised price, the margins are significantly going up. Okay. Let's see how the things are moving. So far, it's very good development. Margins are absolutely under control, so it is expected to go up further actually.
Understood. So can you expect a similar margin which we are in our EPC business?
Sir, EPC is slightly now the new projects wherever we are quoting, we are not quoting anything less than 14 to 14.5% because our tummy is full. So we have given a clear-cut instruction to the business development to work only 14.5% plus minimum at EBITDA level. This type of margins in EPC context may be not practical, maybe not possible now. Okay, but this is a specialized contract where we could able to crack, and the per ton price has gone up. Okay, because of the escalation and all. So but what will happen is. At a consolidated level, once the mine starts, our EBITDA margins will improve a lot, because we are thinking that next in midterm we are trying to come back to our normal reported margins of 13%. Plus, if this comes, there's high probability that the blended EBITDA may go up.
Understood. What is the kind of execution run rate we expect in Uttar Pradesh Jal Jeevan Mission project? Are you expecting in FY23, FY24?
I think today we have got DPR updated for 666 crores. And perhaps with this, we should be able to achieve plus 200 crores.
How much, sir?
Plus 200 crores.
We need to close in 2 years. Okay, so at the minimum level this year we need to cross 850 to 900 crores. That's the minimum level we have kept. Okay, there's a possibility that may also improve. So next 2 years we need to close it.
Because more villages DPRs as we come up, because the other order what I said, 1,850 crores that we are yet to start the DPR side. DPR takes 6 months. Then only the implementation comes. We have to update the ordering also on that.
And what is the kind of opportunities you are pursuing on the water side? Is there an opportunity to bid more for projects like Jal Jeevan Mission across the country?
Yeah, sure. Today our order booking around 2,750 crores, and we have started executing in 2 or 3 projects, and we are gaining the expertise there. And it is nothing extraordinary. It is not a very high end. It is a matter of putting different groups in different villages and then controlling operations from a control center. 100% in place. That is where it is done. And otherwise, the skills and the manpower deployed that we can easily get it done. And as an investment, we have seen the total investment is 0.6 lakh crore. The total Jal Jeevan Mission, what Government of India has planned as part of the National Infrastructure Pipeline. And the present norm is every village, the average cost investment is 1 crore, 1 crore per village. But in reality, it will go up by 50%, because the items which are included for the village because number of the households and then how many places we have to give tappings and all, can go our experience is about 50% it will go up. Therefore, even this present order, what we have taken, the likelihood of going by 50% is very much there. And I told you about the O&M opportunity of the complete offer around and into the percent. But having taken major portion of the job, we have one or two projects will certainly in this year also. But we don't want to expect too much because there's a lot of spread is required in that, and we are quite satisfied with what we are having.
Understood, sir. And how do you see the O&M opportunities panning out in the next couple of years? Do you think we'll be able to target something substantial in the domestic side? Do you think the opportunities are very, very limited in the domestic market?
I think that is a very important question what we asked, and that is of interest to us also. See, O&M has got a couple of segments of work. One is the power sector where we have established our leadership around 7,000 megawatts and operating 40 and half one. And what we have seen is the customers, particularly in the public sector, the total availability of the opportunity more than 80,000 megawatts are there. And not much has been penetrated there because they are still doing the old method of doing departmentally, and ultimately they have to catch up with the tariff cost involved. Slowly they will try to do the subcontracting outsourcing of O&M also. That opportunity is available. NTPC, we are doing about 100% job in about phase 1. And we have taken Singareni, that is 2 into 600 megawatts. And the private sector, anyway, we established our. Then the other thing what we have seen is that, the projects where we have completed in the Middle East, we have done about 7,000 megawatts of captive power plants and then utilities and all. We are approaching these customers for opportunity in O&M. And then the two types of opportunity there, one is shutdown and breakdown maintenance. I told you about 80 crores we have done the job, taken the orders last year. And that segment will go. And then the long-term O&M contracts, like what we are doing on AMC basis, that we have to figure out more in the international segment also with the expertise what we have gained. And a lot of inquiries are coming in, and that is another area. Third, I told you about the drinking water. The projects what we are completed, at the end of the contract period, the O&M becomes part of the contract for 10 years. That will be an add-on project. And some of the EPC jobs where we are going to complete it, perhaps O&M opportunities available in the minerals and material processing side, EPC jobs, and the coal handling, material handling, and other things, and then non-power sector. So these are the opportunities will be there, and that is Satish has given a figure. Perhaps this year we want to target about 1,200 crores, and slowly we want to double up the O&M segment. And all these O&M jobs are repetitive jobs and eligible for renewal, and that is where we don't have to study again for the same job because we are already established there, and customer doesn't want to the existing manpower and the resource injected by a contractor, and they would like to extend it to the regulation. For the opportunities can be many, and we are quite hopeful on that.
Do you think this NCLT, some of us are stuck in NCLT and they are restarting, the lenders are restarting the project with the help of NTPC. Do they increase your basket of opportunities given that if I remember correctly, there are a couple of power plants, import coal-based power plants, which are supposed to start operation in Andhra Pradesh?
Sure. I think that is very important. All NCLT projects are wherever these have gone, and shut down because of variety things. The government is now filling the shortfall what have happened in the last 2-3 months, and they are working with banks also to fund these projects and see how it can be reached and all. And they are also limiting the imports of the coal for all the imported requirements also. And all these things together should open up these NCLT projects also, and we are there. We are very much there.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you, sir.
Thank you. We take the next question from the line of Dikshit Doshi from Whitestone Financial. Please go ahead.
Yeah, thanks for the opportunity. Just couple of questions. First, you mentioned about the royalty payment. So how much would be the royalty payment we must have paid in FY22?
Sir, FY22 could be around 1.5%, sir.
1.5% of revenue.
Yeah, it used to be 2.5. Okay, gradually it has come down because the pile is coming down.
Okay.
Yeah.
Okay. And my second question is regarding this MDO project, MDO from CCL. You mentioned that this 400 crore annual top line could go to 600 crore. So, just a clarification, is it because the cost of doing the job has gone up, or is it because the coal prices have gone up? I mean, just wanted to understand that our revenues are linked with the volume or the prices of coal as well.
No, sir. See, our price is not linked to the coal price, but our price is linked to the cost per ton which CCL is going to pay us. The contract says that Power Mech will be paid 886 rupees per ton. And that 886 rupees, there is an escalation clause that is subject to escalation. And there is a formula of WIP where they have given weightage of 55% to diesel. So because of that, this 886 rupees which CCL is supposed to pay to Power Mech, that stands at 1400 rupees today.
Okay. Okay.
Yeah.
Okay, understood. Thank you. That's it from my side.
Thank you. As there are no further questions, I would now like to hand over the conference to the management for closing comments.
Yeah, thank you everyone for joining the call and showing the confidence on Power Mech. If anyone has any more clarification, they can directly reach to the management at any time. Thank you very much.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.